In recent years, the world of traditional work has undergone significant changes due to COVID-19, the rise of fintech, and the creation of the gig economy. Now, these factors have accelerated the shift towards a more digital, flexible, and decentralized future of work. The pandemic shifted the trend towards remote work, with many companies moving to a work-from-home model to comply with the social distancing guidelines and leveraging platforms such as video conferencing, collaboration tools, and cloud-based software to maintain and achieve equivalent levels of productivity. It also forced many businesses and individuals to shift to more online transactions by leveraging fintech platforms such as Stripe, Venmo, and PayPal to make it easier to accept digital payments, which increased the adoption of digital fintech platforms. And this ultimately caused a surge in gig work and more freelance contracting because businesses had to adjust to the economic uncertainty and the shifting demands of business. Platforms such as Upwork, Fiverr, and TaskRabbit have made it easier for individuals to find work and for companies to hire on-demand talent. And as of 2021, the global gig economy market sat at $355 billion, projected to reach $873 billion by 2028, according to businessinsightsresearch.com. So in this video, we're going to be discussing how fintech and the gig economy are shaping the future of work, highlighting the benefits of the gig economy and fintech for both workers and employers, and discussing the challenges, risks, and opportunities that exist in this collaborative space that will impact the future of work as we know it. If that sounds interesting to you, then let's talk about it. Hello friends, welcome back to the channel. My name is Jeremy, and if you're new here and haven't yet subscribed, please consider doing so because on this channel I speak about fintech, digital transformation, personal and career development. The gig economy refers to a segment of the labor market characterized by temporary freelance work, typically facilitated by online platforms. Now, gig workers are also known as independent contractors, freelancers, or self-employed individuals who work on a project-by-project basis or have short-term contracts. Now, examples of gig economy jobs include Uber drivers, Airbnb hosts, and freelancers on platforms such as Upwork and Fiverr. The gig economy has grown significantly over the past decade, fueled by the rise of technology platforms that enable workers to connect with customers and clients. One of the biggest changes that has occurred with the rise of gig workers is the increased flexibility and autonomy that these workers enjoy. Now, unlike traditional workers who are typically tied to a fixed schedule and location, gig workers have the freedom to set their own hours and work from wherever they want. This flexibility has made it easier for people to balance work with other commitments such as family or personal pursuits. Another significant change that has come with the rise of gig workers is the blurring of the lines between personal and professional life. Because gig workers often work from home or other non-traditional workspaces, the boundaries between work and personal life have become increasingly fluid, and this has led to greater emphasis on work-life balance and the importance of taking breaks to prevent burnout. However, the gig economy presents several challenges for workers, including a lack of job security, benefits, and protections. Gig workers are classified as independent contractors, which means they are not entitled to the same benefits as traditional employees, such as health insurance, retirement plans, and paid time off. Moreover, gig workers are responsible for their own taxes and expenses, which can be a significant burden. Now, fintech, being the use of technology to deliver financial services, has the potential to address and solve several challenges that are faced by gig workers by providing them with access to financial services and tools that were previously unavailable to them. Fintech-enabled payment systems, for example, enables gig workers to receive payments quickly and securely without the need for a traditional bank account. Now, many fintech platforms also offer financial management and budgeting tools, which can help gig workers better manage their finances and plan for the future. Additionally, fintech has enabled companies to better manage their contingent workforce by providing tools for tracking time and expenses, managing compliance, and improving the overall efficiency of their gig operations. Now, there are several similarities between working in a fintech and gig work, and some of these similarities are more evident in aspects such as flexibility. Both fintech and gig work offers workers more flexibility in terms of their working hours and location. Fintech companies often allow their employees to work from home or other remote locations, while gig workers have the ability to work on a project basis and set their own schedules. Technology. Both fintech and gig work rely heavily on technology to facilitate their operations, and fintech companies use technology to develop and deliver financial products and services, while gig workers use technology to find work, communicate with clients, and manage their projects. Innovation. Both fintech and gig work are relatively new and rapidly evolving fields that require constant innovation and adaptation. Fintech companies must continually develop new products and services to stay competitive, while gig workers must continually adapt to the changing market conditions and client needs. Collaboration. Both fintech and gig work require a high degree of collaboration between different stakeholders. Fintech companies often work closely with banks, regulatory agencies, and other partners to develop and deliver their products and services, while gig workers must collaborate with clients, colleagues, and other stakeholders to successfully complete their projects. Now let's chat about some of the fintech platforms that enable gig workers. Firstly, as mentioned before, the rise of fintech-enabled payment systems are one of the most significant developments in fintech for gig workers. These systems allow gig workers to receive payments quickly and securely without the need for a traditional bank account. Fintech-enabled payment systems typically operate on a peer-to-peer basis, which means payments are processed directly between the payer and the payee without the need for an intermediary. Examples would be PayPal, Venmo, and Square Cash. Now, these platforms allow users to send and receive payments using their mobile phones or computers by linking their payment system accounts to a credit or debit card or a bank account if they so choose, and then use the platform to send and receive payments from other users. And many of these fintech-enabled payment systems also offer additional features such as invoicing, recurring payments, and scheduled payment reminders. Financial management and budgeting tools can also be quite useful for gig workers. Now, these tools help gig workers track their income and expenses, plan for taxes, and create budgets for their personal and business expenses. Some examples of such fintech platforms would be Mint, QuickBooks, and Expensify. Now, these platforms allow users to connect their bank accounts and credit cards and automatically categorize and track their transactions. Users can also create customer categories for their expenses, such as business expenses or personal expenses and taxes. Now, many of these platforms also offer additional features such as invoicing, receipt scanning, and bill payments. Now, we've touched on the benefits of gig work supported by fintech to the individuals, but what about to the employers? Well, for one, they gain access to a flexible workforce. The gig economy allows employers to tap into a flexible workforce that can be scaled up or down as needed without the commitment of long-term contracts. They also enjoy reduced labor costs because employers can save on labor costs by hiring gig workers on a project basis rather than as full-time employees. They also gain access to specialist skills. Gig workers often have specialist skills that can be difficult to find among traditional employees. Employers can access these skills on a project basis without having to invest in training or development. They also gain an increase in agility because the gig economy also enables companies to respond more quickly to market changes, innovate more effectively, and operate with greater agility. And finally, they gain reduced overhead costs. By hiring gig workers who work remotely, employers can save on overhead costs such as office space, equipment, and utilities. Now, while the gig economy, supported by fintech, does offer many benefits, there are some potential challenges and risks that are present as well. As I briefly mentioned earlier, lack of employment protections means gig workers aren't entitled to the same cover as traditional employees, which can leave gig workers vulnerable to exploitation and financial insecurity. Inconsistent income is another factor because gig work can be unpredictable, with income varying from project to project, making it hard for workers to plan and budget, causing financial instability. There is also cybersecurity and fraud by virtue of using fintech platforms that can compromise the user's personal and financial information. The lack of regulation can create an environment in which workers are exploited and companies can engage in unfair practices as well. Now, to address these challenges and risks, policymakers, companies, and the workers themselves can take a number of steps, such as establishing minimum standards for gig workers, such as minimum wage, sick leave, and access to health insurance. The fintech platforms can work to provide gig workers with more consistent income by offering longer-term projects and building financial tools that help workers save and budget. Cybersecurity measures such as implementing strong encryption, multi-factor authentication, and regular security updates can address the fraud issues arising from leveraging fintech platforms. And finally, by also increasing regulation to protect gig workers and prevent companies from engaging in those unfair practices. The future of the gig economy looks promising with the synergies that exist with fintech. With the continued development of new technologies and financial tools, gig workers are likely to have access to even more resources and opportunities in the years ahead. Now, one trend that is likely to continue is the growth of specialized gig platforms that cater to specific industries or skill sets. For example, there may be more platforms that focus on connecting freelance writers with clients or that specialize in providing graphic design services. Another trend is the increasing integration of fintech and gig platforms. Fintech companies are already working to build more seamless payment systems and to provide gig workers with access to credit and financial planning tools. Now, a friend of mine, Foster, reached out to me recently with an incredibly comprehensive platform idea for the gig economy called a Cash. And his platform effectively becomes a one-stop shop for everything financial related for a gig worker in Africa. So it essentially becomes a neobank specifically for the needs of gig workers, and the potential that can be unlocked there is massive. Overall, the future of the gig economy looks bright with the support of fintech. As new technologies and financial tools are developed, gig workers will have access to even more opportunities and resources, which could lead to greater financial stability and career success. However, it's important to address the challenges and risks that come with the gig economy. I hope you found this video valuable, and if you did, remember to hit the like button and leave me a comment, and I'll see you in the next video. Cheers, guys.